Okay. Hello once again. Hello to everyone and welcome to our webinar, First Time Home Buyer in Saskatoon. My name is Petro Skirchuk. I am a realtor with Realty Executive Saskatoon and I am the first speaker of today's webinar. We have the second speaker. His name is Ronald Quaroni. He is a mortgage broker in Saskatchewan. Ronald will introduce us to the home buying process regarding the financial aspect of that process. Especially, he will talk about the mortgages. He will answer to all our questions, and he will explain better what you should be aware of and what you should be prepared for in order to obtain this mortgage. Before we start, just let's double check if everything works properly on my side. So on your screen below, you probably have a chat where you can write down all your questions that you might have during the webinar, or maybe right now. Let's double check if everything works properly. So please write down number 1 if you can hear me clearly and loud, and number 2 if you for some reason don't hear me clearly and loud. So we have number 1 from Sanjay, number 1 from Ronald. Welcome, Ronald. Please turn on your camera. And also Andres Medina. Hello, Andres. Thank you so much for your participation. Okay, so we are good to go. We are good to start our webinar. Let's start. First of all, let's start with the agenda. So our webinar is basically consists in 3 main parts. Part number 1 is my presentation. Me as a realtor, I will introduce you to the home buying process, what your realtor should or shouldn't do, and what to expect from your realtor. And that is also because the realtor is the person who will guide you from the first step till the end when you receive the keys. The second part of our webinar will be presented by Ronald Quaroni, a mortgage broker in Saskatchewan. He will explain better how to get the mortgage, what are the pros and cons of getting the mortgage, and the mortgage process in general. And in the end, we will answer to all your questions. So from the beginning, if you have any questions or if you want to have some clarification on something that you heard from today's webinar, or maybe you have some generic questions about the home buying process, or maybe about the mortgage, so do not forget, just in order to not forget to answer these questions, write them down, all your questions that you might have, write them down in the chat, and we are going to respond to all these questions right away. Or maybe at the end, we will have a couple of minutes, we will review all the questions, and we'll answer to all of them. Okay, so let's continue. Just a couple of seconds about myself, why you are here and why you can trust what I'm saying and who am I. My name is Petro Skirchuk. I'm a realtor in Saskatoon. I work with Realty Executives, and I live, studied, and work in Ukraine, Italy, and Canada. I'm a homeowner and a landlord, so I definitely was in your shoes, especially when I bought with my wife. We bought our first property, and then when we continued by buying rental properties. And I'm multiple-time top realtor with my brokerage. So that's why I am here to explain you better how the home buying process works. So on your screen, you can see some of my happy clients, some of pictures of my clients at the possession date. The possession day, this is the most emotional day when people finally receive the keys of their new home or their new property in general. And as you can see, all these happy faces, it looks like I do my job pretty well. So let's start by talking about 3 most common, most typical types of properties in Saskatoon. And of course, we are going to talk about single family homes, about townhouses, and about apartments. So let's start from the most common type of the properties that we have so far in Saskatoon. It's a single family home. As you can see from this picture, a single family home means that you don't have any walls in common or shared walls with your neighbors. You have some sort of privacy because you usually have a backyard. And on this picture, the backyard is not fenced, but still you can have a good fence between you and your neighbors just to have more privacy. Or you can also do whatever you want because you are the owner of the building and you are the only one owner of that land. And that how the single family home looks like. Of course, there are some pros and cons of this type of the building, and in my opinion, the most important pros of this type of the building is that you are the only one owner. So that means that you can redevelop, rebuild, build an addition without generically without any permits or approval from your neighbors. But at the same time, everything should be according to the law, according to the rules. And the land is yours, and the land is something that usually goes up in value all the time. The land, when you have a single family home, you own the land where that house stays on, and that land, the land itself, is, I would say, the most valuable thing in real estate. And usually the land goes up in value all the time, especially if we look back in time, back in, let's say, 10, 20, 30, 50, or maybe even more years. The price of the land goes up all the time, slowly, but still goes up. And there are some cons, of course. The most significant cons of a single family home is the price. Usually single family homes, they are more expensive than other type of properties. They are probably the most expensive. That's why if you want to buy a single family home in the same neighborhood, you will see different properties like townhouses, single family homes, and apartments. And in the same particular area, in the same particular property, the single family home usually will cost way more than an apartment and more than a townhouse. The other con that I would like to point is the maintenance. Of course, when you are the homeowner, when you own a piece of land, when you own a building, there is always a maintenance. You need to replace the roof. You need to change the exterior of your house. You need to take care of your lawn. You need to take care of the whole building, outside and inside. It's all your own expense. And sometimes these expenses might be really high. That is what we are paying because we own something that we're not sharing with others. At the same time, we have townhouses. Townhouses is a really common type of properties in Saskatoon. On this picture, you can see one of the types of townhouses. But still, when you have a townhouse, typically, or let's say typical townhouse, you usually share a wall with your neighbors, or maybe even more than one wall, and you usually share a piece of land that number of townhouses stay on. So you are not the owner of a particular piece of land, but you have shares of the common land. That is the biggest con of owning townhouse. There are not so much privacy. You usually do not have your own private backyard, but the backyard is open to everyone and belongs to everyone. You might have some sort of a patio or maybe a pad just for your vehicle, etc., that belongs just to you. But the rest of the land that where all these townhouses stay on, that belongs to everyone, and you have a shares of that common land. So that's why there are some pros and cons of this type of the building. The main pros of this type of the building is the price. Usually townhouses, they are cheaper than single family homes, and they are more affordable, of course. And another pros is that part of the maintenance is common. Because you share with your neighbors walls or land or driveway or something else. That's why there is a maintenance, and that maintenance is not just your own expense, but you share this expense with other people, usually with all your neighbors in the same complex of townhouses. But still, all the expenses, they are not just from your pocket, but they are from they are paid by yourself and also by your neighbors. That is a big pros, because sometimes the expenses of maintenance of the building, they might be really high, and in this case you are going to share these expenses with your neighbors. There are some cons, of course. The first con is that because you are sharing the land, because you have walls in common with your neighbors, all these neighbors, they have a so-called homeowner association, HOA, or condominium. And in this condominium, the majority of votes, the majority of your neighbors will decide if they want to have some sort of rules or policies, or maybe not. Sometimes these rules, they are regulating, for example, the number of pets that you might have. Or sometimes these rules might require a permit or an approval from the condominium, from a majority of people who live there, if you plan to do some renovations, etc., etc. It all depends from condominium to condominium, but usually when you have a townhouse, this townhouse belongs to you, but also to a condominium, and there might be different rules and different policies in each condominium. And because of that, and because of there is a land in common, there is a building in common or some walls in common, that means that there is a maintenance in common. And in order to have all the works done with the building and with the common land, you are you are going to pay every month so-called condo fee. Condo fee, it's a fee, or it's like a monthly payment. That portion of that payment will go for the daily maintenance of the common property, and portion of that payment will go to the main repairs and replacements. We will talk about it later, but still, there is a condo fee that is a monthly payment that includes sometimes some utilities or some other things, but you cannot avoid and stop paying the condo fee. Even if you don't live for some particular period of time, if you don't live in your townhouse, you still have to pay that condo fee. And that condo fee usually is the same if you live in your townhouse or maybe not. If you are the owner, you are responsible of all these monthly payments, and you cannot skip them, you cannot postpone them, and you cannot avoid them. And also, this is like a rule that you cannot not follow. Then the other type of properties we have in Saskatoon, they are so-called apartments or condos. On your screen, you can see a classic example of an apartment style building. If you have an apartment in that building, you usually share a lot of walls with your neighbors. So you have a lot of walls in common with your neighbors. That is why, let's talk about cons of this type of the building. That's why there are some condominium rules or some policies that are even more severe in comparison to townhouses, because of lack of privacy, because of sometimes lack of soundproof walls. There are many rules, many regulations, especially regarding the pet policy, especially regarding the renovations. Usually in Saskatoon, when you are the owner of an apartment, you cannot do what renovations you want. and you need to obtain an approval from the condominium before you start any renovations. Sometimes you can just paint the wall without the approval, but all the rest should have the approval from the condominium, and the condominium regulates really in detail everything you can do there. And you, of course, you have to obey to these rules, because the majority of your neighbors decided that these are going to be the rules of your condominium, and you have just to obey. There is a condo fee, of course, because there is a lot of things in common, the building in common, the land in common, and somebody has to take care of that building, of that land, of all the repairs, all the maintenance. That's why there is a condo fee. That condo fee usually even higher than in the case of townhouses, because there are many more things to be done. And another con that can be a con or even a pro, that is the fact that you will have a lot of neighbors around you, and you are going to share with your neighbors the building. You're going to share with your neighbors, for example, corridors. You are going to share with your neighbors parking stalls, etc., etc., etc. That might be a con. That might be one of the pros, of course, because it all depends what kind of people you will have around. Sometimes it might create you some issues. Sometimes it might help you to live better in your apartment. There are some cons. The biggest con, in my opinion, is the price. Usually, apartments they cost way less than single-family homes, and they cost less than townhouses. And the price is a big price, especially in today's market in Saskatoon. Usually we have condos or apartments that if you buy them with 5% as a down payment, and you pay the mortgage every month, mortgage plus condo fees plus property tax, that amount of money that you are paying for your own property sometimes even if is lower than the rent. And that is what we have, and we will talk about it later. And then another big con that we have, that is that the major part of maintenance is common. So if your roof is leaking in a multifamily building, if your roof is leaking, if you have some issues with the front door, etc., so that is not your own expense, but at the expense of the whole building, and all the neighbors will contribute to this expense, and they will contribute with this expense all the time when they pay the condo fee. Because when you have a condominium, you definitely will have a lot of maintenance. The condominium, that means that you have something in common with your neighbors. You have for example, the land might be in common, the building might be in common, and other different things might be in common. You are sharing it with your neighbors. That's why you have a condominium, and that condominium, because if there is a maintenance, that condominium usually hire a management company to take care of the building, to take care of that common property. Sometimes some condominiums in Saskatoon, they decide to not hire a management company, but to take care of the building, of the land themselves. That is possible, that we can find in Saskatoon still. And in that case, that condominium is not managed by management company, but is managed by is self-managed. So there are some people probably living in that building with you or your neighbors who will take care of the building for some sort of remuneration. Of course, you will still have to pay to these people to take care of the building, but that is something we can still find in Saskatoon. Another thing we should remember when we talk about condominiums is that the fact that you will have the monthly payment that you cannot avoid, you cannot skip, and usually you cannot reduce just for yourself. That is called a condo fee, or homeowners association contribution. And that condo fee includes on one side some operating expenses, on another side reserve funds. Operating expenses, for example, might be building expenses. So there are some expenses, daily expenses just for the maintenance of that building. And there are some administration expenses. There is also in your condo fee, usually, especially when you own an apartment or even a townhouse in Saskatoon, in that condo fee that you are going to pay every month, the insurance is already included. And also some utilities might be included. In Saskatoon, usually when you own a townhouse, water, sewer, and trash removal is included in your condo fee. When you own an apartment, even water, sewer, garbage, even heat might be included in your condo fee. So it doesn't matter how much water you're going to use in a month, it's all included in the condo fee. And that you don't have a water meter or a water meter to pay for the usage of your water. You may use basically whatever amount of water in a month. That might be a good option for someone. And another part, the second part of that condo fee that you are going to pay is called reserve funds. That means that there is a special account for big renovations, for big repairs, planned renovations, like for example, changing the roof every 20 years, changing the siding of the building every 4 years. That is a planned expense, planned renovation. And all these planned renovation, they are part of these reserve fund expenses. So when you pay every month your condo fee, a portion of that condo fee will go to the daily expenses. Another portion will go to reserve funds and will go to this special account where you accumulate money with time. And after 10 years, you will have enough money to do some big renovation. That's why when the time comes to change the roof or to change the siding, to do some other expensive renovations, expensive repairs, usually the condominium has enough money, has accumulated with time, enough money to do this renovation. So that is the importance of the reserve funds. One thing that you should pay attention to regarding the condo fee is because of the cost of maintenance, the cost of labor usually goes up with time. That's why condo fee or operating expenses, which is the part of the condo fee, usually increase, usually go up. That's the same for reserve funds. Because of planned renovations, because of the cost of labor, because of the cost of materials, these costs usually will go up with time. In 5-10 years, the labor is definitely more expensive than now. In 5-10 years from now, the materials basically will be more expensive than now. That's why the condominium usually increase the condo fees with time. That increasement might be really quick. You might see your condo fee goes up every year. You might see your condo fee goes up every 5 years. You might see the condo fee goes up every, I don't know, maybe even 20 years. It all depends from the condominium to the condominium. And when you are going to buy an apartment and when you're going to buy a townhouse, you will have access, you as your realtor, you will have access to all the financial documents from the condominium, all the financial predictions, and all the expenses that they're going to happen in this particular condominium in the next 20, 25, sometimes even 40 years. And that's why when you are buying a condo, when you're buying an apartment, you're buying a townhouse, you will have the picture of your condo fees, how they go up or maybe even down in the next 40 years. What are their predictions? Okay, let's move on. And just a quick question for you. Please write down how much do you pay for rent if you're renting? How much do you pay every month in Saskatoon, or maybe not just in Saskatoon? So in the chat below, please write down the number of your monthly payments for the rent. Please write down how much do you pay for rent. Okay, I can see really high numbers. Juliana, $1,605. Okay, Andres, $1,500. Okay, that's a lot of money, to be honest. Of course, in today's market, that is what we have in Saskatoon, and potentially, at least from my part, I don't see any signs of the things to be different, but still. Okay, we have 1,600 from Kudi. We have Kwok, 18, so $1,890. George Shevchuk, $2,200. Naftal, $2,000. Naveen, $2,500 every month just for rent. Okay. Okay. So the most important thing from today's webinar, in my opinion, is just for you to remember: when you rent, you lose. When you rent, you lose. And I will explain you why. On this slide, you can see how much, based on how much you paid per month, you will see how much you are spending, how much you are paying out per year. And we have some numbers that are not even fit this this chart. But anyways, you can see, so for example, if you're paying 1,500 per month, at the end of the year one, you spend for rent $18,000. Then I calculated that every year, usually we have an increasement of rent of 5%. So that means if you're paying $1,500, after first year, you paid 18,000. After second year, you paid 5% more. That means you paid 18,900, and so on and on and on. And in 5 years from day one, in 5 years, if you started to pay $1,500 per month, after 5 years, you usually should expect to pay $99,461, almost $100,000. That is a really big number, isn't it? So please remember, when you rent, you lose. So that's why you're here. Let's talk about 5 steps to buy a home in Saskatchewan. 5 most common generic steps of what you are going to do in order to buy something for yourself and to not pay so high numbers for rent, and to pay for your own property. In at the same time, you will build your equity. You will have something to sell. Even if you decide to move to some other places, you can sell something. You will have your money back, and potentially you can even earn something because of the prices going up. Okay, so let's talk about five steps to buy a home in Saskatchewan, in Saskatoon especially. So step number 1, talk to your realtor. Your realtor will be your guide, who will guide you from step number 1, when you first spoke with your realtor, to the final step, when you receive the keys from your property. So talk to your realtor, understand better what exactly you're going to buy, what suits better for you, and what is the average price for that kind of property, what are good or not so good neighborhood, how the value of your property may go up with time, how to build your equity, what to expect, and what can be your expenses during the home buying process. So your realtor is your guide, and that is the person who you should Meet at the beginning, at the very beginning of your home buying process. Step number two, talk to a mortgage professional. Talk to a mortgage specialist to understand your budget. Even if you cannot buy right now, at least your mortgage broker can explain you what you should do in order to buy some real estate in the future. So the mortgage broker is your guy regarding the financial part of home buying process. Step number three, after you spoke with your realtor, you know your budget from your mortgage broker, you understand what exactly you want to buy. With your realtor, you go on showings. Your realtor can book showings for you for some uh, different types of properties, just in order to get familiar with different type of properties. And on each showing, you will talk on each property. There will be just you and your realtor usually, and you can talk to your realtor directly, and your realtor has to show you some pros and cons of each property you're going to view, because there are no ideal properties. Any property has some pros and cons, and in order to understand better what you're going to buy, what you're going to face in the future, you need a realtor who is an expert of that particular market. So you go on showings, and we are going to see uh, different numbers of properties until we find something that you really like and you really want to buy. At that point of time, when we found some property that you like, that you can afford, that is exactly what you were looking for, at that time we will start to negotiate with the seller and with the seller's realtor. I, as a realtor, if I represent the buyer, I can show you any property available in Saskatoon, any of them. And at the same time, me as your realtor, the buyer's realtor, I will be representing you. I'll be helping you during the whole home buying process, but especially when we want to negotiate. It is possible to negotiate in Saskatoon, yes. Not always, not all the times. Sometimes we have properties that are sold for the full asking price, or even sometimes for over asking price. Can it happen? Yes. Last month we had 34% of properties sold for the asking price or above the asking price, because of the market, because of that particular property, because there were more buyers than listing, than properties in that area. That means that if somebody bought a house and paid more than the asking price, usually that's because that person, that buyer, was competing with other buyers. That can happen. Unfortunately, that can happen in Saskatoon. That is happening for the last almost 3 years. And in my opinion, it doesn't look like we are going to have different market in the next, let's say, 2-3 years from now. So you can negotiate, and your realtor will help you to negotiate, will explain, you will show you what was sold and what was the purchase final price, just in order to understand how much you can negotiate, because we can negotiate the price. We can negotiate the possession date when you want to move in. We can negotiate what goes with the house or with the property, what you're going to buy with that property. For example, fridge, washer, dryer, etc., or maybe even some other appliances, or maybe even something else like a hot tub, etc., that might be negotiated. Also, we can negotiate uh, some conditions. So that means that when we negotiate, usually we negotiate on paper. That means there is an offer that is prepared by your realtor. In that offer, there is mentioned how much you're going to offer, what is the price you're going to offer, when you would like to move in, what you would like to be included in the purchase price. And that offer that is prepared by your realtor, you sign that offer, and that offer goes to the seller. And the seller, who is his realtor, who is seller's realtor, has three options what to do. Option number one, they can accept our offer. They are okay with everything. Option number two, on to our offer, they can send us back the counter offer. In the counter offer, usually they want to negotiate something. They want to negotiate the price. They want to negotiate the possession date, or etc., etc. So the counter offer is the response to our offer, and on the counter offer we can agree and sign that counter offer, or we can not sign that counter offer because we are not okay with something. So we present another offer. So that's how you negotiate. We present the offer, we receive that offer signed, or maybe the counter offer. And then we are going to decide what we're going to do. Are we going to sign the counter offer, or we want to present another offer? So offer, counter offer. That's how we negotiate. Once we negotiated everything, and we negotiated the price, we negotiated the possession date, we agreed on what is included in the purchase price, we move to the next step. Every offer has some sort of conditions of the validity of that offer. The most generic and most common conditions are, first of all, the mortgage, that after we negotiated, we will have 7, 10, 14 days. It depends on the case basis. We will have some sort of time to obtain the final approval from the bank for the mortgage. And once we agreed on everything, I will send all the documents to your mortgage specialist, and your mortgage specialist will finalize with the bank. We'll finalize all the documents with the bank, and the bank will give us the final approval for the mortgage. That is condition number one. So that means after we negotiated everything, we will still have time to have the final approval from the bank. If we got it, good. If we don't, for some reason, the bank is not going to give you the mortgage, we will cancel the deal, we will walk away from the deal, and you're not going to lose any money. There is no any penalty. That's why we have this condition and that period of time when we have to fulfill that condition, or maybe we have to cancel the deal because that condition was not removed. We didn't get the mortgage, for example. The second condition that we usually might have, especially if you're going to buy a townhouse or an apartment, that is a condition that at the same time when we are waiting for the final approval from the bank, from the lender, at the same time we are going to receive all the documents from that particular condominium. I will receive these documents, you will get them, and we will review these documents, just especially the financial part of these documents, just in order to understand how much you're going to pay every month, what is your condo fee predictions for the next many years, what is included in your condo fee, what are the planned repairs or replacements in that building. So that is because you need to understand what you are going to face in the next couple of years, or maybe many years once you bought this apartment. Same for townhouses. That is a condition. So we will receive these documents, and in the same 7, 10, 14 days, we will decide, are we okay with these documents? Or maybe we are not okay. We want to cancel the deal. I mean, we will cancel the deal and walk away from this deal. And you're not going to pay any penalties, any money. You're not going to lose anything. Another classic example of a condition that we might include in our offer, that might be at the same time while we are waiting for the final approval from the bank, at the same time while we are reviewing the documents from the condominium, we might do a home inspection. And the result of that home inspection might work for us or might not. We won't walk away from the deal, or we may ask to the seller to do some repairs before we move in. So all these conditions, they they form part, they are part of our offer. And after we get the offer accepted or the counter offer accepted, we will start working on all these conditions just to double check the property, just to understand better what we are going to buy, just to have the inspection of that property, just to have the final confirmation for the mortgage, etc. So conditions might be different. I just pointed three most common conditions we have, but still we may include everything that you want to know before you agreed with the purchase. Okay, we have a question from Constantine. Is the mortgage broker necessary, or could I get the pre-approval straight from the bank? Yes, you can. And Ron will explain it better. What are the benefits to get an independent mortgage specialist or a mortgage specialist from the bank? But you can use both of them. There are some pros and cons, of course, and Ron will answer better to this question. So after we negotiated and after we let's go to the next step. When we have all these conditions to be removed, we have the final approval from the bank for the mortgage. For example, we did the home inspection. We are okay with the result of the home inspections. We are okay with all the documents that we have received, reviewed from the condominium, in the case of an apartment or a townhouse, and we still want to buy this property. We still want to proceed with the purchase. At that point of time, we are going to remove all these conditions, and the removal is in writing, and your realtor will prepare the documents that basically says, we're going to remove this and that condition. We want to proceed with the purchase. So from that step on, we are going to the last and final step of your home buying purchase. I will send all the documents to your lawyer, or maybe if you don't have one, I will give you some contact information of good lawyers. I will send all the documents to the lawyer. Your mortgage specialist will send all the documents to your lawyer. You will receive a phone call from the lawyer's office, and they will invite you to come to the lawyer's office to sign all the documents, to sign the passage of the property from the previous owner's name, from the seller's name into your name. You will sign all the documents for the mortgage for the bank. You will sign, you will also, your lawyer will also review all these documents just to double check that you are buying what you want to buy and all the documents are full and correct. After you signed all the documents with the lawyer, you're going to pay to the lawyer, to the lawyers, the so-called lawyer's fees. And usually we are talking about, if you're going to buy an apartment, it might cost you from 2,000 to 2,500. When you're going to buy a townhouse or single family home, usually it might cost you, the lawyer's expense might be from 2,000 to 3,500. It all depends on the particular property, especially on the purchase price. Once you signed all the documents with the lawyer, the next and final step is your possession date. At the possession date, and that possession date we agreed when we were negotiating with the seller. At the possession date, I will meet you at that property. We will do a final walkthrough just to double check that everything is included as we agreed during the negotiation process. That house or that townhouse or that apartment looks like we saw, and everything that we agreed that stays with that property is there, works properly, and everything is as we agreed. If everything is fine, you will receive the keys from me, and also I will give you some presents. And if you don't mind, we will take a picture, but that is optional. We can skip it as well. So step number one, talk to your realtor. Step number two, talk to a mortgage specialist. So step number three, we will have showings, and then if we found something valuable, something you wanna buy, we will start to negotiate. And then after we negotiate it, we will have some time to review the property, to review the documents, to do the home inspection, to have the final approval from the bank. And if everything is fine, we proceed with the purchase. If not, we will walk away from the deal. We will cancel the deal, and you are going to lose any money. Then after, the best option, if we is that we are okay with the property, we reviewed everything, we still want to buy. The next step is signing all the documents at the lawyer's office. And then the very final step is the possession date. When you receive the keys, you will do the final walkthrough. And you, from that moment on, you are the only one owner of that property, that particular property. From step number 1 to step number 5. The job of your realtor is to guide you through the whole process and to help you on every step. Okay, so that is how the home buying process looks like. Once again, my name is Petro Skirchuk. I'm a realtor with Realty Executive Saskatoon. And on your screen, you can see my phone number, my personal phone number. Call me or text me anytime if you have any questions about real estate in Saskatoon and in Saskatchewan in general. And if you would like to have a free consultation, a free meeting with me, where we can talk about your expectations about home buying process in general, about different type of properties, about real estate market in Saskatoon, just call me, text me anytime. We will schedule a meeting with you and we will talk about everything you would like. Hi, Ron. Hi once again, and welcome back. And please take the lead of our webinar and talk more in details about the mortgage.
Thanks, Petro. I really appreciate that. If everyone can drop me a 1 in the comment section again, just to make sure that everything, my audio is coming through as well, I'd really appreciate that. Awesome. Thanks, Kwok. Thanks, Konstantin. Navim, Andresh. All right, let's get the presentation rolling here. And if everyone can give me a thumbs up if they can see a page that says mortgages for newcomers. Okay, wonderful. Let's get right into it, guys. I appreciate everyone making time. I know sometimes everyone is busy. We have families, and I really appreciate you making the time to sit and chat about real estate and potentially getting yourselves more information on buying a home in Saskatoon. So a little bit about me before we get into the presentation. I am a mortgage broker. I've been brokering for about 5 years. I work under the brand ISAS Mortgage Brokers. It's a really amazing team of brokers. There's around 100 years of combined lending experience. So even if there's something that I can't figure out, if there's a question that I don't have an answer for you right away, I have a lot of experienced brokers that I can rely on. If you see that picture in the corner, that's me and my family. I don't know if you can hear anything from upstairs. We're just doing bath time right now with Eva. But one of the reasons I was really happy that Petro asked me to be a part of this presentation is that even though I'm not a new to Canada person, my wife is from Serbia, and getting that perspective of how hard it is culturally, climate, to move to Canada is a very big thing, and home buying is just another thing that is very different than maybe where you come from. And so my goal as a mortgage broker, if you're someone who is new to Canada, is to at least take a little bit of the stress of home buying off of you and at least making the financing side easier. And a lot of that just comes down to being prepared. But I did want to let you know that I do understand a lot of you, even though I don't, not from or not new to Canada, definitely have that soft spot for folks who come here and are carving out an amazing life, and home ownership is a part of that. And that's also why I am a mortgage broker. I love real estate. I love what it can do for folks for long-term wealth, as Petro outlined earlier in the presentation, that real estate can be an amazing vehicle for securing your financial wealth. So what I'd like to do in this presentation is basically touch on 3 major pillars of getting a mortgage in Canada. The first being credit. The second part is income. Then there's your down payment. And we'll talk about some programs to help you save up your down payment. And then again, just kind of reiterating why a pre-approval is really important. And I'll touch on Konstantin's post there about, do I have to use a mortgage broker? So my opinion is absolutely, but I'll touch on that as well. But let's just start it off with building and maintaining your credit, because this is the number one thing that folks who are new to Canada need to work on in order to get into the housing market. So why is credit important in Canada? Really, without credit, it's really hard to do anything here. It's hard to purchase a vehicle. Some people make you even pull your credit in order to rent a home. And obviously for purchasing home, it's very important. And so having no credit or poor credit can prevent you or exclude you from a lot of these different opportunities that might present themselves. So what goes into a credit score? This is a really a mystery thing. A lot of people don't know what is made up of their credit score. And so I'll go through these 5 different things: payment history, utilization, new credit applications, credit history, and credit mix. So making up 35% of your credit score is payment history. And things that can be really negative for this are missed or late payments, as they're reflected in the report, and adhering to the contract terms and paying bills on time. So if anyone's ever gotten a credit card, there's this like big statement and it has all these contract terms in there. And part of them is the repayment expectation from you back to the credit card company. And one of those clauses that's really important is usually 21 days is the window where you can pay off your balance and not make any you don't have to make a payment essentially or be charged any interest on that. And so that becomes really important for long-term credit health, is making sure you're paying down those balances consistently. And I would even recommend folks make at least 1 or 2 payments per month on those credit cards, just to make sure that our payment history looks really good for any lender that's looking at us. Next is utilization, the balances that you carry on that credit. In order to maintain a really good credit score, it's important to have around below 50% of your available credit. This means that if you had a credit card with a limit of $2,000, you shouldn't be using more than $1,000 before you pay it down on that credit line. If you stay below that 50% mark, it's really going to help build your credit. And lastly, high balances cause beacon scores to decrease. And I saw this just yesterday with a client who actually has fairly decent credit, but what they are making the mistake on is they allow really high limits on their cards, and this is having a really net negative effect on their credit score. So really important to never go over the limit on your credit card. Credit history, the length of time your credit account has been active. The longer the history, the better. If you have accounts that have a good repayment history, it's good that you don't close those, because those actually help increase your credit score. Again, just a reminder, if you do have questions, feel free to pop them into the chat there. We'll get to all of them when we get to the question period at the end of the presentation. Credit mix. This is the different types of credit that you have been applying for, whether it be auto loans, credit cards, going through a mortgage broker or your bank to check your credit. Credit cards, auto loans, and mortgages help your score, but keeping in mind some credit lines have a negative effect on your score. Things like easy loans or payday loans, lenders will look at that more negatively, and this might actually bring down that score as well. And then lastly, new credit that you're applying for. This is triggered by you continually seeking new credit, and the quality matters too. So when you go to apply for a mortgage broker check on your credit does not have as much as if you're going to 12 different dealerships or multiple credit card companies. Ours is viewed a little bit lower. And on the new credit side, a lot of folks who are new to Canada worry that by me checking your credit, that it's going to negatively impact it. But as you can see, it's only 10% of the overall score. And I've never seen it that me checking your credit will have a drastic effect on it, maybe 1 or 2 points. But it's really important during the home buying process to take a look at your credit to make sure that if there's any credit cards that are overbalanced, if there's a parking ticket that you didn't pay at a certain point, that it's all set up and ready to go when you go to look at houses with Petro. A good rule of thumb when talking about credit is the rule of 2, 2, 2. And so if you're looking to build and repair your credit, you need 2 forms of credit. So this could be an auto loan, a student loan, credit card. Has to be reporting for at least 2 years with a credit limit of at least $2,000. And more specifically, for folks who are new to Canada, you're wondering, hey, I haven't been here for 2 years. How can I apply for a home loan and still be approved? And there are programs available to you. And it does depend on whether you have a 5 or 10% down payment. And so a 5% down payment, basically, we need a year's history of you making alternative credit payments. And so one portion of this is 2 forms of 12-month histories of bill payments, whether this be utility bills, cell phone bills, insurance, and then secondly, a letter from your landlord just stating that you've been making your payments on time. If you do have a higher down payment, we can use 6 months bank statements that shows good repayment, steady history on these different credit lines. Just quickly, just to make sure everyone's not sleeping on me, if you could, I'm always really curious about if there are new Canadians here or people who are new permanent residents or on work permits, let me know in the chat, how long have you been in Canada for? All right, as you guys are entering that into the chat, let's talk about income. So there's 3 factors of income: your total annual income, the income source, and the employment duration. There are a few different types of income. There's part-time, full-time, contract, self-employed. As a gold standard, it is good to have a 2-year history of working at your job, although there are different ways that we can still use your employment history when applying for a home loan. All right, Sam, 3 years. Sanjay, 2 years in April, coming up on your anniversary. Congratulations. Kwok, this is old hat. You're here for 7 years now. All right, continuing on, we have the hourly income versus salaried income, and keeping in mind that if your hours are guaranteed, some of this might still be applicable for both sections. But in general, what I'm going to ask for when applying for a home loan for you is 2 years T4s, a letter of employment, and pay stub. If you're an employee, this is pretty standard information. If you've been here less than 2 years, there are a lot of times that we can move forward with a letter of employment and a pay stub. Keeping in mind that things like overtime, bonus, or commission are going to need at least a 2-year history. So even if you have a steady commission job, we would need a 2-year history of being in that position. Ghazi, 7 years, wonderful. Glad to have you here. All right, now chatting about folks who are self-employed. So this means if you are working for yourself in your own business, and this goes into 2 different categories. If you're working as a sole proprietor, we do need a 2-year history of your T1 generals with notice of assessments, and also showing that we don't have any taxes owing for those years. If you're incorporated, we still need 2 years T1 generals, notice of assessments, articles of incorporation, 2 years financial statements, and again, just making sure you're up to date on your taxes. Naptal, nothing at all wrong with 5 months. I hope that you are enjoying the cold weather so far, although today wasn't too bad. It was actually kind of warm. Talking about additional types of income, we have commission sales, bonus income, spousal or child support, disability and pension income, child tax benefits, vehicle allowance, and rental income. So lenders are very interesting that all of them view different income, and they would like different documents involved when requesting forms of this. And so if you run into a situation where me or another broker is asking you for a lot of documents to help confirm your income, it's because if you have different types of income, there might be different versions of comparing that or confirming it with the lender. And so for each of these, we might have to ask for a few different documents to verify where that income's coming from. When chatting about income, it really comes down to your income versus your monthly debt load. So the debts that you have to pay every month, no matter what. So that'd be your credit cards, your auto loans, obviously the home itself, versus the amount of income that you make. And this is kind of the determination that as a mortgage broker looking at your file, I'll say whether or not that this fits within the lender's policy, that you make enough income to get into the property versus the debt that you're paying. And so the debt servicing breaks down into 2 different debt servicing ratios. One is gross debt servicing that focuses on the cost of the house. Total debt servicing is the cost of the house plus any outstanding debts that you have. So gross debt servicing, what's included in the calculation is your mortgage payment the property taxes, the heat, and the condo fees. And this is really important to work with a realtor like Petro, who's paying attention to things like the property taxes, the heat, and the condo fees. And then as we're working on a pre-approval with you, I love to go through different budgets that show you, based on this property tax amount, based on these mortgage payments, this is what you would qualify for. And then on the other side, we have the gross debt services, and then we add on things like your car loans, credit cards, lines of credit, and personal loans. All right, moving on to down payment. I didn't have gray hair when starting brokering, but down payment is probably the thing that has given me more gray hair than anything, is because the government makes it really hard for folks who are buying a property in Canada, because they want to make sure that no illegal funds are entering the housing market. And so it's up to brokers and your bank specialists to make sure that the down payment that's being used towards the property is coming from legitimate sources. Legitimate sources being, did you earn the income, making sure that it wasn't the result of terrorist activity, or if it was the result of illegal funding. So if you were selling drugs, housing is a great way of laundering money. And so this is why the government puts in these rules for us to track the down payment and where it's coming from. So the down payment that your broker or bank specialist is going to go through is a 90-day history of where the money has been in your bank account. So in a lot of cases, if you have a 90-day history of the funds being there, it becomes very straightforward. We provide that 3-month history to the lender, and then we're off to rock and roll. So on that statement, it needs to include your name, the account number, and nothing crossed out, and then any explanation of large deposits that aren't connected to your work. This is very common if you've sold a vehicle. So if you have a deposit of $7,000, it's like, hey, where did that money come from? And so making sure that you have a bill of sale that correlates with that, especially if you know you're going to be buying a house soon, becomes really important to track that large deposit. Sources of down payment. These are sources that you can obviously use for the purchase of the home. So again, own resources. If you've been working at a job, you can of course use that to purchase the home. Gifted down payment or gifted equity. Gifted down payment can come from your mother, your father, your brother or sister. Some exceptions can be made on this, pardon me, but it's very limited. So keep in mind, if you're thinking about getting a gift from a family member, to disclose that to your broker as you're chatting with them, and they can help you plan for how that might take place, because some lenders might not accept gifted down payments for certain properties or property types. So just important to communicate where down payment is coming from during the home buying process. And then maybe not for this purchase if it is your first home, but borrowed equity or sale of a home or asset can also be used as a down payment. I'm going through this right now with a client where he is selling an existing property and then using the sale proceeds to directly go to the new lender. So when we do the second mortgage together, you'll be able to tap into borrowed equity or sale of a home or asset. Let's talk about minimum down payments here for a second. So for an insured mortgage, an insured means less than 20% down. Any mortgage in Canada that is less than 20% down does need mortgage default insurance provided by one of 3 mortgage default insurers. And then this just adds a premium onto the mortgage amount that you pay off over the lifetime of the loan. So the minimum down payment is 5% on the first $500,000. 10% for any portion above $500,000, and then between 1 million, and then a maximum purchase price below 1.5 million. I like to touch on this because I think it's really great for you to start preparing. So even if there's conversations you want to have with Petro or myself after this, these are things that you can start planning for even before you're really serious about buying a home. So the first one is planning for the home buyer's plan. This allows you to withdraw funds from your RRSP to a max of $35,000, allows up to 15 years to repay back that money into the account. You need to be the owner of the RRSP, and you must be a first-time home buyer, must be a resident of Canada at time of withdrawal. So the great thing about an RRSP is a lot of folks have some sort of RRSP work matching plan, and there's a lot of times where you can actually use that work RRSP and use it to help you buy a home. And it works really well for folks who do have that matching, because the limits that are built in there can add up very quickly. And then you just repay that $35,000 over a 15-year period. It can be really helpful if you're having trouble saving the down payment outside of that RRSP. But another one that I really love is the first home savings account. So even better than an RRSP is the first home savings account. The negative of an RRSP is it's really for retirement, because as soon as you pull money out of the RRSP, you have to pay tax on it. But the first home savings account, it acts like an RRSP and also a TFSA, that you withdraw the money tax free and you get your tax deduction at the end of the next tax year. So if you're buying a home, you absolutely need to be opening up a first home savings account. You can contribute $8,000 per borrower per year, up to a lifetime of $40,000. And again, you withdraw the funds tax-free for your first home, and then you get that tax deduction at the end of the year. If you're looking for someone who can help you set up a first home savings account, it can be done at your bank, or there's lots of financial advisors and insurance providers who can also set up the first home savings account. And I have a lot of luck connecting people with trusted people who can set this up for you. So please let me know post-presentation if you need an introduction to help you set up your first home savings account. All right, we're coming to the end of it here. Petro wanted me to add this here, and I thought it was very apt, is the importance of getting pre-approved. As a mortgage broker, my favorite thing is when someone says, Ron, I'm thinking about buying a property in 6 months. I'd like to get pre-approved to A, understand the purchase price that I can get, and then B, understanding kind of my monthly payments that are it's going to cost me. And then from there, you can kind of imagine what type of property I want to be in. And so getting that clear budget understanding is super important. And especially on the outset, before you start looking at the MLS and before you connect, it's really great to get pre-approved, just to make sure that you're not looking at properties that are outside of the realm of possibility and what you could get into. When you go, and I really like this part in Petro's presentation where he's talking about negotiating and conditions, you're in a stronger negotiating position if you have been pre-approved ahead of time. Because Petro can say, you know, we'll take Quack, for example. Quack is, he's looking to buy a property. And if Quack's been fully pre-approved, there is a much bigger chance of his offer getting accepted than someone who hasn't been pre-approved. And so this allows you to get things that you want, and especially in a tight buyer's market, you need to have any little bit of leverage that you can. So having a pre-approval in place ahead of time shows the sellers of the property that you're very serious, and allows Petro and you a little leverage when making those negotiations. And lastly, an ideal reason that you want to get pre-approved ahead of time is rate protection. So getting a rate hold in place at different lenders that do allow us to do it gives you that sense of calm that over the next 120 days of shopping, I know that this interest rate is not going to increase on me. So I really love folks who love getting pre-approved, because it shows that you're a serious buyer, and we're going to work really well together. I'll quickly touch on Konstantin's question right now while we're talking about the pre-approval. The difference between a bank and a mortgage broker, and even not all mortgage brokers do this, but for me, when I do my pre-approval, I do excellent spreadsheets. I do a rundown of exactly what different closing costs could look like, what potential mortgage payments are going to be, and really walking you through that process, as well as collecting your documents up front to make sure that we know exactly what you can qualify for. I know at a lot of banks, it's just a matter of questioning you at how much you make and what's your down payment. And the thing is, you might not understand exactly how much you make based on our previous conversation of income, because you might not be able to use all the income that you think you can, or there might be income that you don't know you can use that I can help add to the application and increase that amount. And then just different things we can do around basement suites. And there's lots of exciting things that brokers can do that banks can't. And again, it doesn't cost you anything to use a mortgage broker. We just get paid a commission from the lender, the same as a bank specialist. I think we're coming up to the very end of it. So I really want to say thanks to everyone for tuning in during this presentation, taking the time to learn about real estate. As I said, I love real estate. I love folks who want to get into real estate, because I really believe it's a great vehicle for long-term wealth. So if you'd like to chat, if you want to follow up on some questions, you need a few more details, whether it be income, credit, down payment, or following up on some of those great lending programs, simply send me an email, ron@ronqmortgage.ca. Or if you'd like to check me out a little bit more, feel free to Google me or check out my website, ronqmortgage.ca. All right, Petro, that's it for me. Did you want to go into the questions? I can go through the chat here and
Yes.
quickly
Well,
answer them.
if you can please stop your presentation, I will open the most frequent questions that we usually have. And also, yeah, let's review at the same time.
How do you stop presenting, Petro?
So on the top, you will have the bar with when you change the slides, and also there is a stop button.
Got it.
Okay.
Awesome. Thank you.
And now we are ready to answer to all your questions. There are no stupid questions. Absolutely, ask whatever you want. That is understandable that this is your first time, probably first time when you buy a house, but buy any property in Saskatchewan in general. And that's why any question is acceptable. So please write down all your questions in the chat. At the same time, I prepared a couple of most frequent questions, most common questions that we usually have. The first question is that I usually heard from other people: how can we negotiate? So I spoke about this negotiation process, and I spoke about that we can negotiate the price. It is possible to negotiate the price. Usually, we all come from different backgrounds, different countries, and sometimes the word negotiate can be can have different meanings. And in Saskatoon, based on the last 3 years, and it looks like we will have same situation in the next 3 years, usually you can negotiate something like 1, 2, 3, 4, 5, sometimes 7% of the asking price. And 7 is really rare. Usually you can negotiate a couple of $1,000. And when we see prices, for example, $309,900, that $9,900, that can be negotiable. How much, and you can negotiate in a specific for a specific property, that depends on the competition. If you're going to compete with someone else, if we are going to find some issues with that house or with that property that the seller was not aware of, or maybe we were not aware of. So yes, it is possible to negotiate, especially the price, but it depends on the particular property how much you can negotiate. Okay, and second question that I really would like to answer. So what does your realtor do? I already explained when I showed the home buying process, but just I wanted to add another important thing. So when you buy in general, in Saskatchewan, at least for with me, you are not going to pay me anything, absolutely nothing, because usually in Saskatchewan, the seller pays a percentage of the asking price of the paid price, and that percentage already contains a portion goes to the seller's realtor, a portion go to the seller's brokerage, a portion go to the buyer's realtor, a portion go to the buyer's realtor brokerage. So the seller already paid for everyone. And you as a buyer, you're not going to pay to the realtor. And you as a buyer, you are not going to pay to your mortgage specialist, because please, Ron, correct me if I'm wrong, but your mortgage specialist will have some sort of remuneration from the lender and not from you. So realtor services will cost you nothing. Mortgage specialist services will cost you nothing. At the same time, we are always on your side. We want you to buy with the best price possible. We want the lowest price possible. We want you to buy something really valuable that can potentially go up in value with time. So on one side, there is a buyer, there is a buyer's realtor, and there is a mortgage specialist of that buyer. On the other side, there is a seller, and there is a seller's realtor. So we are two teams. We are trying to have better deal. Each team is trying to have better deal. We are not fighting till death, absolutely not. But at the same time, each team is trying to get better deal. That's how it works. Okay, so the next question. So we already answered to this question. What are your expenses during the home buying process? What you should be prepared to pay for and how much? The first thing that you should have is a down payment. That's Ron already explained why and how much you should have as a down payment. The other thing, the other expense during the home buy process might be the home inspection. Sometimes the buyer might decide to have a home inspection. Sometimes the buyer might decide to skip the home inspection, especially if you are buying, for example, a new build with some sort of warranty, and especially if that warranty has as a that warranty includes any repair, any issue for the first year. For example, that is the Saskatchewan new home warranty, the most common one that has any repairs in the year one. If so, in my opinion and my suggestion is to not have the home inspection at the beginning before you move in, but maybe to have the home inspection when the first year comes to the end. In this situation, you will have the inspection from your home inspector at the end of the year one, and if some issues might be found, your builder or the home warranty provider will fix all the deficiencies of that house. So that is might be even smarter than to do it at the beginning, to do it at the end of the first year when everything, any repair is already included in the warranty. So that might be a smart choice. But usually, when you do a home inspection, when you want to an independent, a professional home inspection to inspect, for example, an apartment, it might cost you around $300 in Saskatoon. If you want a townhouse to be inspected by a professional home inspector, it might cost you from $500 till $600. If you want the single family home to be inspected by a professional home inspector, it might cost you around $600. So that is the expense from your pocket. This expense cannot be included in the mortgage, cannot be included in the purchase price. This is your expense on the side. And the second expense, and the last one that you might have when you do a home buy, when you buy any property in Saskatoon, is the lawyers and other fees. In general, it's a lawyer's fees. Lawyer's fees might be from $2,000 till $4,000, and this expense cannot be included in the mortgage. This is expense from your pocket, from your bank account in general. Okay. And then let's review all these questions. And
I'll quickly touch on one from the very beginning. I hope I'm pronouncing it correctly. Apology. Kostyantin. So you said, is the mortgage broker necessarily? No, not at all. If you wanted to go directly to your bank and get your mortgage from the bank, you can. Of course, I'm biased, so I would say it's in your best interest to use a mortgage broker, but yes, you can get it from your bank. I think you touched on this one, Petro. Is a home inspection mandatory for purchase of brand new property from registered builders or developers? Did you want to expand on that a little bit?
Yeah, so it depends what kind of warranty that builder provides you, because it's not mandatory. The home warranty is not mandatory at all. Some builders, especially small builders, they do not want to spend any more money on the warranty, and sometimes they have no warranties at all. It is possible, absolutely, and that is something we see on the market all the time. Some builders, they have some cheap warranties, so-called cheap warranties. They might include something, but not, I would say, maybe they're not the ideal option for the buyer. So you just need to understand, there are builders and there are warranty providers. And the builder, in order to have to give you some warranty, they have usually to pay to the warranty providers some sort of warranty fee or a certain amount of money. Builders, they need to pay to the warranty providers some money, and these warranty providers may take care or may take care of that building for some sort of some sort of number of years, or may not. So builders, some builders, they're not going to pay anything to the warranty providers, and they do not provide you any warranty. Some builders, they are paying for cheap warranties, and you will have a cheap warranty for your house. Some builders, they are paying a lot for a good warranty, like Saskatchewan new home warranty. And that warranty providers, especially, for example, Saskatchewan new home warranty or other home warranty providers, they will receive money from the builder, and they will have this house under their warranty. That's why to have a new house, it doesn't mean that you will have the best possible warranty. It doesn't mean that you are going to have any warranty at all in general. So it depends on the house that you are going to buy, on a townhouse or an apartment. Some builders, they have some warranties. Other builders, they may have no warranties at all. So it's not something that you don't know before you submit an offer. That is something that your realtor will point for you or will let you know. Absolutely. That is the job of a realtor.
Wonderful.
Okay. So
just going to is it okay if I answer a few more of these, Petro? And then now I'll ask, is it easy to get a mortgage approved by a bank when you are here on a work permit? Naptal, easy depends on kind of your situation. If you're employed, if you have a job, if you have a saved down payment, and there just needs to be a certain number of days left on the work permit before you take possession of the property. So that's something definitely to chat with a broker or the bank ahead of time to make sure that your work permit's still going to be valid. What percentage, this is from Kostintin, what percentage for mortgage could I get with an 817 credit score? So that's a great credit score. I think you're asking about the interest rate. As long as you have an interest rate over 720, you're going to have access to the best rates. And so it's just a matter of time when you get the accepted offer, just seeing what's on the market, what makes the most sense for you. But that is a good credit score. Quack, curious, does it deduct same credit score for different late payment amount? For example, 5,000 versus 50? I don't think so, Quack. I think a missed payment is a missed payment, and it has the same effect on your credit score as being a negative. So yeah, don't miss any payments, whether it be a $5,000 payment or a 50. What is a good credit score to get a low interest rate? Anything, your minimum credit score with most lenders is 650, and then a 720 credit score gives you access to most lender products and rates. If I got a pre-approval secured with a rate, meanwhile, if rates go down, will my rate go down when I get the final approval? Quack, yes. If you get a pre-approval and rates come down, you will be able to get that lower rate. The rate hold just protects you if rates were to go up. They're not going to increase it. You get to hold on to that rate. Naptal, is it easy to get a mortgage approved by the bank when you're here on a work permit? I think I went through that one, Naptal, but let me know if you need any further clarification on it. Jessen, if I am looking to buy a house next year, when should I get a pre-approval generally? Generally, Jessen, I would say 4 months ahead of time from you looking to purchase the home is a good time to meet with the broker, because at that time we can get a rate hold in for you, and then you can hold the rate for 120 days. Do you have anything to add on that, Petro, about when you would like them to reach out to you to start having a discussion?
That's a perfect timing. 4 months ahead of your purchase, that is perfect. You will be one of my best clients ever.
Wonderful. And Sanjay, you asked about a rent-to-own process. I'm not the biggest fan of rent-to-owns because it can put you, the borrower or the buyer, in a tough situation where you're paying more for the rent, and the person who is renting you the property is saving up a little portion of your monthly payment into a down payment account. And then it's an option to buy the property within a 5-year period. And then if you don't usually buy the property, it can be tough. And it's really important that that contract be set out really good ahead of time, because not all lenders will let you refinance out a rent to own. And so you can put yourself in a tough situation. So I would just make sure if you're doing a rent to own, you're using a very legitimate company and it's being set up really well ahead of time. For most people, I think it makes more sense to wait 6 months or a year and to buy at that time.
And another thing about rent to own, so it's not so popular in Saskatoon in general, and there is a reason why. Because the market is really quick. You can sell your property within a couple of days, a couple of weeks, let's say 1 month. So that means that if I'm a seller and I want to sell and to wait until the potential buyer in 2 3 years will accumulate this money by paying the rent, and portion of that rent will go to the down payment. That means if I'm the buyer and I am going to wait for 2 3 years in order to have this money from the buyer, that means that I'm going to sell for way higher price than to sell on the normal market. Because if I want to sell something, I will sell it easily in a couple of weeks, maybe let's say in a couple of months. Okay. And in order to wait for a couple of years instead of a couple of months, in order to wait a couple of years, I would like to sell it for way more, for way higher price than the average price. So that's why it's not convenient for the buyer at all. For example, if you are going to buy a house for $400,000 on the market, if you're going to buy it with the rent to own option, it might cost you something like 50, 60, 70,000 more, just because the seller is waiting for a couple of years until you pay for that property. So it's not so popular at all. I saw just a couple of deals like that in the last 2 years. That's why we don't have this option on the market, to be honest.
Justin asked, could you please explain a little about refinancing? Justin, refinancing can be quite complicated. I'd be happy to send you a video that would maybe explain it a little bit more. The process is essentially just, usually it's tapping into equity, but a refinance really just means restructuring the existing mortgage. So whether that be taking money out or getting a lower interest rate or extending the amortization. But if you want, I'll send you more details on that just for time limitation here. Naveen, what is the minimum employment duration needed for mortgage pre-approval? I think this ties more into the amount of down payment that you have, Naveen. If you did have that 10% down payment, then you would have the availability to do a 6-month bank statement program. And then it would become, do you have permanent full-time income? And if you did, you could buy within that 6-month window. Sam, buying a house under construction, is it possible? Absolutely it is. It's very common now with homes being built, and they're anywhere from 2 to 6 months out from being completed. You can absolutely buy a home under construction. Andres, if I sign...
Just one clarification about the pre-construction selling. Buying something at the early stage of the building. So in some regions, in some countries where there is a high risk of the builder to not complete the building, to not complete, or maybe to complete but to not build something that they promised, or the way how they promised to build that building. Usually in Saskatoon, if you're going to buy at the early stage, you will not have any sort of discounts. You will not pay less than for already built building. Usually it's like that. There is a reason why, because there is pretty much no risk, or the risk is so low that's why builders are not going to sell for less than the already built house.
Andres, if I sign my 2nd-year contract, do I need to wait to my 3rd year to start the buying process? A lot of it depends on the dates, Andres, and the type of contract that you are under. Typically, you need a 2-year history, but if you're 1.5 years in, and then there's income that we could show from, let's say, 2023 and part of 2024, there is the potential that we could use some income there. Naveen, generally, what is the time frame for the 5 steps you mentioned? Petro, I would say 30 days. What would you generally say
Yeah,
for?
the minimum was 3 weeks that I had in my experience. So in 3 weeks, it is possible to find something really valuable, to negotiate the price, to do all the inspections needed, and to sign all the documents with the lawyer and to get the keys. So 3 weeks, I would say this is a normal, minimal time frame. But we can do it even in 2 weeks if it is needed, of course.
It would depend on the sellers of the property as well. If they didn't want to have a really quick possession, that might extend the time period.
Absolutely. Yeah.
Justin, is it needed to keep the FHSA funds for 3 months as well for the down payment? So, Justin, the funds just have to touch the first home savings account, and then they can be automatically withdrawn. Keeping in mind, we still have to track the money. So if the money goes from your savings account into a first home savings account, we'd still need a 90-day history of the money prior to it going into the account. But it doesn't have to stay there for the 90 days.
Okay, so it looks like we don't have any other new questions. And if you have some other questions, just write them down. At the same time, I would like to show you how much you're going to spend approximately if you are going to buy different kind of properties. For example, these are properties that were sold in the last 3 months in Saskatoon. I just wanted to show you the real numbers. For example, there was a condo in Lakeview, 2 bedroom, 1 bath, in, I would say, not the best shape, but still a condo that you can buy in a good neighborhood in Saskatoon. And the final price was $145,000. That means that your down payment was, if your down payment is 5%, is $7,250. The closing cost was $2,100, and your monthly payment for 25 years, not even for 30, for 25 years, was in total $1,311. If you want to rent an apartment like that, you should be paying at least $1,400. So as you can see, $1,400 rent, $1,311 to buy. To buy is, in this case, is even cheaper than to rent. That is crazy, but these are real properties from the market. Same, another apartment. This one is 3 bedroom apartment, bigger apartment in really good shape. It's in move-in ready condition. So in this case, you are going to pay every month all the expenses included: condo fee, property taxes, and mortgage plus mortgage loan insurance. The total payment will be $1,711. That identical apartment for rent will cost you around 18 or even 1900, so even more than that. Then let's take a look at this apartment that was sold recently in Hampton Village. This is a really nice apartment, newer building, 2 bedrooms, 2 full bathrooms. It was sold for $239, almost $240,000. Monthly payment for an apartment like that will be $1,918. And for rent, it might vary from 1,900 to 2,000. So it's almost same numbers. Let me show you a townhouse that was sold recently in Briarwood. Fantastic area, fantastic location. Not a brand new townhouse. It was built in late 90s, if I'm not wrong, 1998 or 1999, but still really nice townhouse. 3 bedroom on the second level, a garage, 1 car garage, and great kitchen, and also family room on the first level. And also in the basement, you have a large family room. So that townhouse was sold for $318,000. All your monthly payment with 5% as a down payment will be $2,364. For rent, a townhouse like that might cost you from $2,300 till $2,500. And let me show you just other 2 last examples of a house. For example, the house in Lawson Heights was sold for $375,000. That house was built in 70s, so it's not the house from your dream, but still a good house to live in. And the final price was 375, and your monthly payment will be $2,354. I saw at the beginning when we asked how much do you pay for rent, there was someone who mentioned 2,500. So with your monthly rental payment, you may buy this house, and it will be even cheaper every month to pay off this house for 25 years than to pay the rent that you are paying. And another one, the last the last example I wanted to show you, it's a really nice house in Stonebridge, a big house that cost a lot, of course. It's $513,000, but it's a really nice house with a two-car attached garage in Stonebridge, one of the best neighborhoods in town. So if you buy that one with 5% as a down payment, your monthly expenses for 25 years, not even for 30. For 30, it will be even lower. For 25 years, your monthly payment will be $3,159. And a house like that is on the market, is rented out for around $3,500, from $3,000 to $3,500. It depends on the location, on the exact house, etc. But still, same as to pay for rent. That's why as I mentioned, when you rent, you lose. And another thing to remember, when you rent, you usually pay the mortgage, but not for yourself, but for your landlord. That is how it works. It's not a bad thing. It's not a good thing. That is how it works, and will work for many, many years ahead. So that's a second thought for you to think about, to buy a rental, because when you buy a rental property, your tenant will pay off your mortgage. But that is a topic for the second webinar, not for now. Now, for you, if you are still renting, the first thing you should to take into consideration is to buy anything you want, but not to pay for someone else, but pay for yourself. Build the leverage. Use that that amount that you already spent for your own house when you sell it or when you buy something else.
Wonderful.
Okay.
Couple last questions here. I think we're probably getting close to the end. So if anyone does have any last minute questions they want to add in, please do. Naptal, can you use the funds from the home country, probably when you sell a property or a car there? Naptal, it depends on the country of origin. Some countries are harder to get money out of, and they're on watch lists. In this case, you need to transfer the money to Canada and then have it mature in an account for 90 days. If there was a country of origin that we couldn't use, but in some cases we can just use a 90-day history of the money being transferred and show the transfers. And then Kwok, Ronald, you mentioned the down payment can be gifted from parents and siblings. Can it come from my wife's parents and siblings if I'm the only applicant on the mortgage? Kwok, the answer is yes, but not all lenders will allow this. It's going to be called a spousal gifted down payment. And so in that case, you just have to find the specific lender that would allow for that type of down payment.
Okay, Ron, may I ask you one question regarding this topic? So when you receive, for example, in this case, a person is going to buy and he's an only one applicant, and he receives the money from the wife. And does the lender ask about where the wife received this money from?
Typically, no. If it's the case, that we'll usually try and be as truthful as possible and say, if the funds are being gifted from spouse's parents, then we'll approach it like that, just because we don't want to get any stories crossed. And as much as you can, you want to tell the truth. But the lender doesn't ask that specifically of where is that money coming from. Most lenders just want a proof for the down payment, at least, that it's been deposited into your account, and then there'll be a gift letter signed from the person who's gifting it to you, mentioning that the money is non-repayable. Justin, to whom do I pay the property? When you say the property fee, I assume you mean property taxes. This is paid to the municipality or the city of where you're buying the property.
Yeah, and at the end of the year, you'll receive a letter. For example, in Saskatoon, you'll receive a letter from the city of Saskatoon that shows you where exactly your money went. So you will see how much money how much, what is the portion of that your property tax went to the school in the neighborhood, went to the library, went to the park, etc.
So, question from Naveen: can the property be bought, registered jointly by me and my spouse? If so, credit check done on both. Yes, definitely both of you can go on the mortgage application as long as one of you does not have a profile that makes it such that you can't be on the application. If you have someone who has a really bad credit score, sometimes that excludes them from being able to be a part of it. And then the second part of your question, Naveen: if so, is the credit check done on both? Yes, all applicants on the mortgage have to have a credit check done. You might have said this already, but does the buyer pay a mortgage broker fee? Do I have to pay it in cash, or does it add up to the total mortgages? Like a silver briefcase Kostentin that I'll just take like $10,000. No, no fees for mortgage brokers. The only time that there are going to be extra fees in relation to your mortgage is when you're using an alternative lender. So this is for folks who have really bad credit, or no other bank or typical lender is going to take a look at that borrower. Then there's lenders that charge a lender fee, but the broker themselves aren't charging it. And then there are times where there are private mortgages. So this is if Petro had $100,000 and he wanted to lend it out, and I had a client who came, and typically it's for someone who's buying rental properties that can't be bought typically through banks because they're in such rough they're in really bad condition. And so the private lender will lend the money to the borrower. And in this case, because the private lender is not charging or not paying me a commission, I would have to then charge the borrower for that. But I've never done a private deal, and so I've never charged a client a fee.
Okay.
Wonderful. It was
So
really amazing to interact with you all. I really appreciate the opportunity to present on this, and thank you again, Petro, for letting me be a part of this.
I apologize, Ron. Just one important question. So, Ronald, who pays the mortgage broker?
The
Who pays you?
Who pays the mortgage broker? So the bank will pay the mortgage broker. So, for example, a good example that I like to use is a lender like Scotiabank. You can go to Scotiabank and get a mortgage, the exact same mortgage that I can offer, and they will pay a mortgage specialist at Scotiabank to do that. And they do the same thing for the mortgage broker. So, depending on the term and the amount of mortgage that you submit, that is going to be based on the commission that I receive on that, but it's paid directly by Scotiabank, not by the lender. So each lender that I work with will have an amount that they pay me for a certain term and rate that is chosen, and then I don't let that determine what mortgage product I submit in. I always have a really collaborative effort with my clients to say which lender makes the most sense for you and which term and which rate, and then from there they choose, and then we submit off there, and then based on that I get paid a commission from the lender. Hope that makes sense.
Okay. So okay. Please write down in the chat if you received some valuable, important information today. If you uh, have something more to think about or to take into consideration at least. Okay, thank you so much for the presentation, Kwok. Thank you so much for you being active during this webinar. Thank you so much for all your questions. They were really important, and the reason of this webinar, why we are doing it, because we want to share this information. I am sharing my information from my side, from the realtor side, and Ron is sharing information about the mortgage from his perspective. I apologize. If you would like to proceed and if you would like to start working with us, we are always available. You will receive an email from me probably tomorrow morning. You will receive an email from Petro Skirchuk, Realtor, with our contact information, with my phone number, Ron's contact information. And if we would love to continue to work with you and to help you to buy something that you would really want to have, or to some really good properties. Okay, so we don't have any other questions. Sanjay, thanks, Petro, Ronald, for all this info. Thank you for all your questions. Thank you for being here, and we are going to stop our webinar. Thank you once again, and hopefully we can work with you in the future.
Thanks, everyone. Have a great night.
Bye-bye.